All right, everybody. Welcome back to the Rob Review. Your friend in success. That's me, Robert Morrison, your friend. Obviously, I want you to have success. That's why I'm your friend in success. That's why I'm doing this. I believe wholeheartedly that the world would be a much better place, especially America would be a much stronger economic. They would have a much stronger economic base if all of us went into our first years of work, earning our first paycheck, whenever that is. For me, it was at 11 when I really started making money, but I started working for somebody for the first time when I was like, I think 16, 17, 18, somewhere around there. No, 19, when I realized that I just couldn't get a business off the ground without first having some experience. And so I tucked my head between my legs and went to work for somebody, and I learned it wasn't that bad as long as you have a long-term plan. Point is, those first paychecks for me were put away and saved. And I had saved money from pushing a lawnmower when I was 11, and I started all the way through middle school and high school saving money. Now, what if I had been somebody that didn't have any knowledge of the stock market? Well, that money could have just been blown. Or if I just had financial knowledge, it could have been simply invested, but then you tack on this knowledge of the market without going into much detail about my life. If you take out the negative things that I did with my money and my time as a young adult, I could have used that money that I started building when I was 11 to set myself on a financial footing, to never ever have any debt, to never ever have to deal with the things that I had to deal with as a young adult, getting into debt and then having to get back out. You put the knowledge in the right hands, and I believe the right hands are anybody, and you show them the foundations, which are what we're talking about here, and then they grow in their whole life. They're actually benefiting society more because they're not worried about money. They know eventually they're going to be financially independent, and then as financial independence takes hold, they're going to be able to do things with their extra that they couldn't have done if they didn't have any extra. And then, bigger than that, their retirement is going to take place earlier. They're going to be a better, happier person, and they're never going to have to worry about drawing on Social Security as a primary source of income. I know people that the Social Security check they get, and they get it because they paid into it, and deservingly so. They put it straight into the offering plate when they go to church, or they give it to a charity because they don't need it. How many elderly people do we have now would be in a better place if they financially were able to grow their money 10, 20, 30 times X when they were working during their working years? Now they would have more. And that's what my mission is. And I labeled it Stock Market CEO because I believe that's what you're doing. You're becoming a CEO of your finances and your life and your investments, and understanding that primarily life is about living with purpose. Secondary, you have to have money to be able to fulfill a lot of those things. So primarily, our objective is to get money out of the way so we can really live. Now, with that preaching aside, what we're talking about tonight is candlestick charts. The basics of which are the foundation of the how-to of profiting in the stock market. Whether you're investing or trading, and I believe once you learn how to invest well, you're going to want to trade. It's like having the ability to grow a money tree. And you grow this one, and you're feeding it, and it's getting ginormous as an investment. But then you learn from other people from seeing the opportunities out there that you can add on to that tree and grow it faster. You can make it grow stronger. Why would you not? You would. See, investments are the foundation. They're the core. Long-term wealth is what is built in the stock market best. But when you see the fact that, okay, maybe I'm putting $10,000, $20,000, $30,000 into my investments every year, well, there's other ways for me to take that money, multiply it, and then I can put 100 or 200,000 in my investments a year. Everybody would take advantage of that if they could. And this is where it begins. How to read candlestick charts with zero experience. At the end of this, I'm going to give you everything that was my basis for learning this, just in case the way that I'm going over this doesn't help you, and for you to get more advanced into it. Because here's the thing, guys. We all start in kindergarten, but we don't stay in kindergarten. Candlestick basics, candle chart, are one piece of it. You add on Western technicals to it. See, if you had a candle chart by itself, it would be better than a bar chart or a line chart. And I'll tell you in a minute why. But if you add on the fact that when a reversal happens on a candlestick chart, you have stochastics and stock RSI, MACD indicators, and Bollinger Bands and moving averages all showing you a bigger, better picture, you can put your puzzle together more efficiently. You're not sitting in the dark as much. And so the beginning of this is the kindergarten foundations of 2 + 2 = 4. And it does in life, it doesn't always in the stock market, but with candlestick chart, what are the basics? And then why a candlestick chart? I mean, it's the most unemotional way to read any kind of chart. With a bar, you get an open and a close. With a line graph, it's just a line. With a candle chart, you get everything. And I'll show you in a minute why. Here's the basic. For those of you that have never seen a candlestick chart or really don't get why it's such a... Now it's like commonplace. When you download a charting software, candlestick charts are generally the default setting, okay? When I started doing this, even as young as I am, candlestick charts were not the default. There's a guy named Steve Neeson. He really brought candlestick charts to the Western world. The Japanese have been using them for years. The idea here is that you can read price better. And you can draw your own really easily, right? All you need is the high, the open, the close, and the low of the day, and you can draw a candlestick chart. And you can easily see that, look, the bulls won today, or the bears won today, or nobody won today because you got a doji. Candlestick charts, you don't have to think. You just read. And that's why it's unemotional, because you're not feeding yourself in the what-if category. You can see very bluntly that the bulls are winning. Okay, now there's a trend reversal possibly coming, because as the up is getting smushed and you see more dojis, it's either going to go sideways a little bit and it could continue up, or it could reverse. Very simple to see. So you either have a red candle where the open and it goes up, and then it gets pulled down below the open and goes low, and then it closes, as you can see, a little bit above the low, but still it's red for the day. Same thing with a white candle or a green candle, however you want to have it. It opens here, the bulls push it, the bears push it down, but then it gets pulled back up to a high and the bears push it down a little bit to close. And there's the margin between the open and the close price there. The thing with candlestick charts is, yes, a lot of people use green and red or white and red to represent up versus down. You don't even need it. My chart, up until very recently, because I had an emotional problem with getting out of trades too early, I turned them all to one color. I think it was blue or green. I like green, so probably it was green. I didn't need the color because I had the candlestick. Candlesticks have to be closed for a pattern to be valid, and really, as we talked about before, candlesticks, I believe, are beneficial when reading reversals, reversal patterns, or when you have a trend reversing. So sideways is not beneficial here. If you don't have a trend already, you can't have a trend reversing. That's the bottom line. You have to have a distinct trend. I like saying you have to be able to draw a trend line on it for it to be going up or down, for you to have a reversal of said trend. If it's just meandering at, like a flow of a resistance and support level, yes, you can trade that, but if it's too small, it's just sideways. It's kind of like, I think they call it swing trading, where you can trade in between the support and resistance. Candlesticks helps with that immensely. All right, here's a major part of understanding the foundations of candles, is that there's a lot of candlestick reversal patterns. But what you're going to see for the most part is bullish engulfing patterns, bearish engulfing pattern, rising 3, falling 3, hammers, hanging mans, dojis of all kinds, and tweezer tops and tweezer bottoms, which are huge reversal signals. What a tweezer top or a tweezer bottom is, I'll draw for you in a minute, but it looks like the end of a tweezer, hence the name. All these are not all the patterns, but what we do have here is the basics, and kindergartners can make money with them. And I am a person that I believe is not in kindergarten anymore in the market, use basically only these most of the time. There's rare occasion where I'll use a different, like a shooting star or something like that. I'll see, or there's a lot of gaps that I use, but these are the main patterns. And so here's what I keep. I keep a very simple thing that you can use as a reference point above my computer. For a long time, I used this because I hadn't ingrained it in my mind yet. These patterns, I believe this is the start for you. And you ingrain these in your mind to the point where you know them without thinking about them. And you can see them without thinking about them. And it changes the way that you invest and trade. It really does. And so the start of this, I believe, is to take each one of these and to figure out on the charts that you use how to see them. Look at 100 or more of each example. Go through every single charting time frame and see how, like on a weekly and a monthly, when a hammer is formed, a hanging man, tweezer top, tweezer bottom. Of course, a hammer and a hanging man are the same candle, right? A hammer is at the bottom of decline. It's hammering down the decline. A hanging man is at the top of decline because people get hung out to dry there. But you go and you look for them and you see that on like a 5-minute chart, they're not as significant. On a daily chart, weekly chart, they're pretty significant. And you can see that every single trend, guys, when it gets tired, it starts to have more dojis form. Oh, well, now we're going to draw some of these is what we need to do. Let's go over here and let's talk about some of this stuff. I'm going to just kind of step over here and take this with me. All right, so patterns. The way this really works is, okay, so you got your regular candle, right? All right, a doji is like a plus sign. It's when nobody is winning. So let's say you have an uptrend, all right? And then here is a candle where the open and the close are the same. There was no high or low, okay? And then you get a gap right here. Well, this gap can signify a beginning of a reversal, and then maybe here, what's that? That's a dragonfly doji. The same thing as a gravestone doji, just at the top of a decline. This means that what? It opened, it went down to a low, and then got pushed back up to close in the same place. But that low can really signify that, oh, maybe the bears are starting to win. And so, engulfing patterns. Rising three, falling. Let's just talk about the rising three. The rising three method is something where, okay, you got a rising candle. I'm not the best drawer. Like this. All right. And then you got three candles going down. And then it from the close of that down candle, it opens up and engulfs all of them. All right? That signifies a continuation of the up. Same thing with the falling three method. It's engulfing it. And an engulfing pattern is the same thing, it's just without the rising three or the falling three. You know, so if you've got an upward move like this, do 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 do, don't you just love my drawing? And then here, you get it open, and it engulfs that whole candle. That is a pretty strong signal of the down is getting ready to happen. And it might not happen right now, but it's going to happen. And you don't know how much it's going to happen. See, that's the key. Let's go back over here. That's the key. You can never be 100% sure of anything in the stock market. But when you see something like that, an engulfing pattern, for example, you might both see your indicators at the top of their scales. You might see those candles riding the Bollinger Band at the same time. That can be not just one, but several of the indicators. And then after it, it might only go down for a couple of candles and then turn back and start going up again. And it might not go down at all. But that couple of candles, depending upon your chart time frame, could be 3 or 4 days, which is long enough to profit from a down trade, or it could be 3 or 4 weeks on a weekly chart. That's why the time frame matters. The reality of it is you got to add this into the other stuff that you know. The candlestick charting setups are only as beneficial with also understanding the time of year. You know, if you've got a large market reversal getting ready to happen, like as I'm recording this right now, okay, we have gone from October of 2023 to January of 24 with an upward moving market and very few downside trades work at all. I got crushed on a downside trade just a couple of days ago because my smart self tried to do a put on NOW just by looking at the chart setting up and forgetting what time of year it was and realizing that even though the market is set up chart-wise, monthly, weekly, 3-day, daily are all pushing the top of the band. The indicators on my chart are way up there at the top of their scale. My directional movement indicator indicates that a down is likely to happen in the near future. I've got all that playing into my mind, but then I got to take into account that that down is not as likely to happen, or is not as probable to happen in January as it is to happen in the middle of February. Whereas if you go back and you really look at your chart, 2020, when the COVID hit, everybody says COVID drove the market way down. Yeah, not really. The shutdown of the economy definitely kept it going and bleeding further than it normally would. But the market was set up to go down anyway. And how would you know that? Well, your Western technicals, Bollinger Bands, and the flattening of those moving averages like we talked about before, allowing for the candles to be able to pass through. Because when a moving average flattens, it becomes less resistant. It's almost none. Whereas if it's rising and the candles come down, they can bounce. But if it's flat, they can pass through. It's like the opening of a gate. And so you have those things setting up in February of 2020. And then you know, well, mid-February is generally a time for strong profit taking, even stronger than mid-January, which can be a time for profit taking, but it doesn't always pan out that way. See, that's the three pieces coming together. I find that it helps not just to know this stuff, but know it like the back of your hand, right? Know it like you know your street address. Like when you were a kid, or at least when I was a kid, my parents drilled into me my home address and my home phone number. Because if I was in a situation where I was in trouble, I couldn't call somebody. There were no cell phones then. And even if I could call somebody, what if they didn't answer? Well, I'm going to panic. I'm in a fear state. I can't think. Whereas when the address is ingrained in me already, the fear state kind of dissipates, and I don't have to think twice about I live at, blah, 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 blah lane. Your cell phone's the same way. Think about before cell phones, really. When I was a kid, I used to memorize all the home phone numbers of my best friend. I can still name off some of them right now. Girls that I liked, when I called their house, you didn't have a place to save that stuff. You had to save it up here. This is the tool of a CEO. This is what I've learned. I had to learn this the hard way, man, because I used to try to keep everything in books in chronological order. And hey, I'm going to write all it down, and all that stuff is well and good. But this can burn. Your hard drive can crash. Nobody can take away what you got here, unless God takes it away. And then you don't need to trade anyway, right? Ingrain it to the point where you know it. And I'm going to show you how to here in a minute. Here right now, actually. This, for myself. And this book right here is called The Candlestick Course by Steve Neeson. It's green. So it's not going to show up on a green screen. Sorry. Profiting with candlestick charts. Here. None of this is going to show up. I'll go over here. This stuff is, I told you earlier I was going to recommend stuff for you. This is all I had to go by when I started. All right. Trading for a Living by Dr. Alexander. I'm sure there's more up-to-date versions of this. Psychology, trading tactics, money management. We'll talk about that next episode. But this guy, Steve Neeson, Strategies for Profiting with Candlestick. This DVD set I bought from his website, but nowadays he's got a more up-to-date thing where you don't even have to buy a book. All right? Come back over here. You can go on his website, and as a matter of fact, I have worked out a deal with candlecharts.com, I think is what it's called, or something like that. The link I'll put, if you're watching this on YouTube, in the description, where it'll take you directly to the most beginner-friendly foundational stuff that Steve Neeson teaches, because I believe wholeheartedly that guy is the most expert of experts when it comes to candle chart. He knows it like like I know videography. I mean, I've been doing videography every day for years. I've only been doing the stock market since I was 16, 17, and I really haven't been doing it full time. 5, 6 years ago, I got super serious about it. But Steve Neeson has been teaching candlestick charts for years. So that, I believe, is the foundation. Go get you some courses from his website or anything. You can go, I don't care, you can get it off eBay. But his website is readily available, and you can watch it right now. And in real time, you can study while watching his stuff and go through and you find examples of 100 of every one of these things. Maybe 200, maybe 300, whatever it takes to make it to where when you see something, you can say, that's a hammer or that's not, because there's a difference. There's a big, big difference, right? All right, let's go back over here real quick. This is actually probably very important. All right. These reversal patterns that I'm talking about, okay? You got, and then here, you got that. That is not a hammer. I mean, a hanging man, sorry. That is not a hanging man. You got to have a small body and a long tail. You can look at tons of chart, and until you know, you know. Because see this? Not a hanging man. Oh, that's bad. This right here, or this right here, is not a hanging man. Same thing with this right here. That's not a hammer. You can't really see that very well, but that's not a hammer. Why is it not a hammer? Because it's not at the bottom of a decline. And the body is too big. It is, I'm really got to work on my drawing skills. It is such a crucial piece of this to where when you're getting ready to take action on this stuff with your own money, I got 1 minute to close out, so I'll make this quick. The fear will grip you if you don't know. And if you don't know, you shouldn't put your money at risk because you worked too hard for it. Dojis are easy to see. But seeing them in a pattern and understanding that I can look at a chart, especially a chart of certain stocks because they have characteristics, and know that if I see a certain number of dojis in a row, that particular move is done. It may not reverse right now, but it's done. It's going to go sideways, and then it'll revert. The market doesn't turn on a dime always, and that's part of your research. You can get there. I know you can. I believe in you. And the next time we're going to talk more in depth about the pillars, which, again, going back and just real quick recap, the profitable pillars, the foundations of this thing is money management, mindset, the how-to, which we've been talking about, and the discipline 100% of the time. All those pieces combined together will make you a fist of confidence in the market that you can knock it out. All right. With that, I'll see y'all on the next one. Enjoy.
The views and opinions expressed in this program or any other Rob Review program are not to be considered financial advice, and all these strategies have their own inherent risk. If you act on information given in this show, you are doing so at your own financial risk. Map.Productions does not take part in your positive or negative financial results. That is why I recommend you consult your financial advisor before acting on any of these tips. What worked for Robbie may not work for you exactly as shown in the show.